Hello, everyone. How's everyone doing? We got that break in crude yesterday. Yen fell. Hope everyone's having a decent week. Hello, Alexander, Sinatra. You guys doing okay? Marco, how's it going? So here's crude. Hi, Jeff, Oliver. So yesterday, I was talking about that this still could be an ABC, and it could be a failing rally, and that's what happened. Hope people took heed. Good call, Stelios, on that we were near that major weekly resistance line, and shorts were the order of the day. Good call, teammate. And the yen broke pretty hard yesterday. It's trying to recover here. I don't think this low is going to hold. I booked it, and I'll put them back out around 110.30 or so, 10.40, because I think this low is not going to stand. Everyone see this low? Thank you, Paul. You see this low here? What kind of low is that? I know you guys know. Just a quick pop quiz for everyone, and that was the reason I sold the rally, because this was a confirmed low. Okay. So markets rarely bottom when momentum is, especially down here, low 20s. I don't think it's a double bottom. Could be. Anyway, I'm flat, and we'll see what happens there. So far, this triple top is trying to hold. I don't know if it's going to be able to. Euro keeps trying to bottom, but just every low rally fails. I don't know if there's any news that could move it today, but it still looks kind of ugly. Canada's not giving me the break I wanted to buy it down here. Maybe we're going to go to new highs and not confirm in Canada. That is a possibility. Euro pound went to that little neckline actually above it, and look at how it's given up the ghost here. Still think we'll get a test of this blue speed line down here, 84.78. It's about another 40 pips lower, and S&Ps are lower. I'm not saying that it can't try and rally one more time. NASDAQ happens to be the strength, but I keep asking people why Russell is so weak. Okay. And so far, it looks like this little pop that we had this week may have been another failing rally. We're getting a little divergence down here. But, we did get that close under 220. I still think you sell all rips. I kind of disagree with people calling this consolidation. It's gone on too long. I think it's a distribution pattern, and we're on the verge of breaking down. 220 could take us back down to 210. I think Russell is on its way down, and so that is a canary in the coal mine as far as I'm concerned. And the gold went to the number I talked about yesterday. In fact, surpassed it today. I was saying with the bearish yen call that the metals would rally and that gold would get to 1830. Confluence of lines here. Looks like it's trying to put in a little bit of a reversal day today. Still a decent week. And, the reason I'm not shorting it is because I still think the yen might have further to go. And the underperformance of silver continues. I mean, you look at gold. You look at gold here. And you look at silver. See how gold took out all these previous highs here? Look at silver bringing up the train. Way underperforming. Could not even take out this high compared to gold just blowing through these highs. So you have to, properly diagnose what's happening in the gold-silver ratio. I still believe that silver will continue to lag during this phase, that there's more left to the upside in the gold-silver ratio. Maybe back to here, 70.93, it's another point. But as long as we're above the 68.50 level, gold is the relative strength leader, silver is the follower. Okay. I believe that Blake is back from a recharge vacation, except he was so active, whitewater rafting, the raft bouncing 10 feet in the air, and Blake just smiling and enjoying it. And I'm wondering how you feeling.
Dude, I'm tired. I'm not gonna lie, man. I'm tired.
I figured you'd need a vacation from that.
Oh my gosh. And we didn't do water rafting. That's actually saved for next trip, believe it or not.
Okay. I was just exaggerating a little bit.
No, but that's really, so let me, I have to tell you guys kind of just a really quick story, and then we're going to get to it. I wanted to tell you just because Dale mentioned this. So these are dear friends of ours that we met in Texas years ago, and it just so happens that the gentleman is a former Marine infantryman like myself. He actually him and his wife, they're 10 years younger than us, but his wife, child psychologist, by education, by the way of education, and same with my wife. My wife's they both have, they both are in child, they're counselors.
Development.
They're counselors. My wife has her master's degree in child, counseling and whatnot. So they work with like both of them, and both of us are like former Marines. And he was in the oil and gas business, but he left it to create a company called Next Level Burger, which Next Level Burger, here, I'll just show you. They're the first plant-based burger. Whoops, here it's
Beyond Meat.
Well, they were around before Beyond Meat, so but they carry Beyond Meat in some of their locations, but this is their brand, and that's actually his back right there. This is them years ago. This is them like 8 years ago. They don't look much different, but they have locations, like 8 locations around the country. I think 8, and then they,
nice.
Then they're actually expanding into several more, and it's the first plant-based
burger chain
place. Chain. It's pretty awesome. Anyway, I've watched them grow over the last 11 years, and they're very dear friends of ours, and it's cool, but they are extremists. When I say extremists, I'm talking physical. Holy cow. We climbed up many mountains, looked, all the pictures that I tweeted a few, those are all the reason why those are so cool to me is because it wasn't like we just drove up someplace and took a picture. Like, all those places that we went were, I remember hiking 2 miles up this mountain to get to the top of basically the mountain next to Mount Bachelor. And that's not an easy hike. It's not, it took me a good hour to get up there, and that was going pretty much vertical. So I think it was the first vacation that I actually lost weight. I didn't gain weight. Anyway, it was wonderful. So it was such a great time. They're such dear friends of ours. We saw them in Montana 2 years ago, and we went to all those great locations in Montana, if you remember, a couple years back, and I tweeted some of those pictures and whatnot. And then this year, this is the first time we've seen them since the pandemic, and we usually see them once a year. So anyway, great people. Forex Gal said eating his burgers, eh? Yeah, no, we the funny thing is the wife who is she? She designed the entire menu. She will not cook her restaurant food at home, but she's an awesome chef. So anyway, all right, let's talk a little bit about the markets. I actually wanted to, I was just looking at Bitcoin as you know, you were talking, Dale. Bitcoin's actually breaking out of this triangle, and you know, I'm like, oh, that looks like we're going to test these lows once again. Finally, I think that's going to happen. But I want to talk about some of the other things that are happening in the markets, and bear with me, guys. I have really been out of pocket. My last week, I've been watching the markets from a distance, from an arm's length, if you will. I've been carrying long. I bought some dollar Canadian last week. Last week, I think, was it earlier this week? I believe it was on Monday, and then, or was it? Anyway, I bought it below 125. I sold it above 125. I think I bought it on Thursday or Friday of last week, and then I sold it Monday or Tuesday, something like that. And the guys and gals in the chat room knew, because I jumped in the chat room. If you guys don't know our ForexAnalytix chat room, it's right here, guys. And by the way, if you're in the chat room listening in right now, you're on Jumbotron. So I was in the chat room peeking in while I was on vacation. I'm like, hey, I'm going to buy some dollar Canadian below, you know, 120. I think it was 124.85. And I sold it. Around 125.25, somewhere around there. Anyway, I'm going to go ahead and put this back over here. And so I've been keeping an eye on the markets, but I'm still long US dollar Norwegian krona and the US dollar Mexican peso, for those of you that don't know. And I'm maintaining those positions for a reason. And I still like the dollar Canadian. I actually think the dollar Canadian and the dollar Norwegian krona are holding up really well. Dale, I heard you talk about crude oil.
Yeah.
So crude, you know, has had an interesting rejection, and I believe we're looking at some possible OPEC headlines today, right?
I'm not sure, but it, you know, it was a failing rally. You know, it's the first time with risk on that it didn't make a new high with stock indexes, etc. So, you know, once we got under 74, it was vulnerable. So everyone wants to buy it at 70 or 69. So I think we're headed at least there.
You know, I don't disagree with you. And you know, if you've been listening to the F.A.C.E webinar on a daily basis over the last couple of weeks, you've known we've been targeting up here, because this is, you know, it's been a triangle target, and also, you know, highs from 2018. It's big resistance zone. Previous support from way back in 2011. Yeah. Big, you know, support, resistance, targets. I mean, 161% extension. We knew we were going up here. Once we got above $75, it's like, okay, now we're really at risk. Divergent relative strength, yada yada yada. I haven't updated my charts here, but you guys get the picture. The risk is, I think if we trade below $71, yeah, we're going to trade back towards 67, 68. So I think that's the risk. Now, if that happens and you start to see crude oil roll over, what is at risk of moving in the FX market, you know, right. Well, that, in my opinion, you're going to see the dollar Canadian probably make a move for the 200-day moving average. We've been discussing this ad nauseum for like the last several months, that Steve had been bearish the US dollar Norwegian krona basically all of early 2021 and late 2020, and same with Stelios. They've been, you know, bullish the Norwegian krona, bearish US dollar Norway, and we've seen it drop aggressively. But what we've seen over the last few months, and really since the beginning of 2021, is we've seen us really stabilize in the US dollar Norwegian krona, despite the rally in crude and the rally in risk appetite. So now that crude looks a little weaker, S&Ps have hit some pretty key resistance, which I'll talk about here in a moment. You know, the US dollar Norwegian krona is actually at risk of breaking higher now. And you can see we're developing this triangle. So, and we're we have been perched above the 200-day moving average now for the last 2 weeks, actually since since just before I left on holiday. So I mean, you get crude oil to roll over a little bit here and trade back below 70 towards 69 or 68. You're going to see the US dollar Norwegian krona make another lunge higher for 9. I say 9, exchange rate. Dollar Canadian is probably going to make a move for the 200-day moving average. I know the Bank of Canada came out, or Macklin was talking yesterday, and I saw some comments being flown around by a few of the people on financial Twitter, but I failed to, I was traveling, so I didn't. Not all the information was registering because I was damn tired yesterday while I was traveling. But I know that the dollar Canadian is really firm after those comments from the Bank of Canada. You can see originally we sold off, pushed a little bit of stops below the 124.50 level, and then pop right back up again. Now we're at risk of, when you ever have a false breakdown, the risk is a move, reversal going the other direction. So we're seeing some, like I said, I think the dollar CAD, the dollar Norway look relatively well bid, especially in this environment. And one last thing I should mention before Steve and Stelios, I'm going to welcome them in and thank them wholeheartedly for the help in the analysis, picking up the slack of me not being around, especially from the analysis standpoint. I do want to mention that the S&P has reached the 161% extension of the May sell-off. We were looking at 261% extensions, if you don't recall from last week. We had this 161% extension that we were challenging, which, by the way, as soon as I left, we saw that pullback. As soon as I was buttoning up my computer to leave, we saw a sell-off, but then we surged to new highs and finally, I think, reached where we had unfinished business, that 161% extension of the May move lower. And you notice how we're struggling here. So if the S&Ps do push lower, I think the risk is you see dollar strength here, because the dollar is and has been holding up very well in this environment. You put in a little bit of selling pressure in equities, you should see the dollar really start to firm against some of these currencies. So anyway, with that being
Blake,
said,
Blake, I was saying yesterday that to Steve and Stella is that, we thought that the dollar wouldn't catch a bid until there was some risk off, but the dollar did it prior to any risk off. Has been firm.
I mean,
right?
The dollar really hasn't, the dollar hasn't pulled back at all. And so, you look at the dollar index, I mean, we're threatening. This is the big triangle that we've been looking at. We're above the 200-day moving average. We get above 92.85 and sayonara. This dollar index is probably going to trade, at least to challenge this resistance here, but flag pattern points to, or pennant points to 94 and change. I mean, I wouldn't want to be in front of the dollar if you see the S&P correct 5%, going into the rest of the summer. What do you think there, Dale?
Yeah, I mean, the dollar's been acting great with risk on, so that's kind of usually a headwind for the dollar. And
right. Yeah.
So now if you get a tailwind, right?
I know there's more to it than just risk on, risk off, and if Stelios will probably be here to tell you that we need to look at rates as well. And matter of fact, Stelios, Steve, how you guys doing?
Good morning. Welcome back.
Thank you. Hey, good morning, Steve. I always say it's nice to be back, but that was probably one of the more beautiful places I've been in the United States. I'm obviously a huge fan of Greece. My travels into your country have always set the bar really high as far as the most beautiful places I've ever been in the world. But in the United States, if you're into fresh, clear water that you can, and lakes that you can see through. You know, you can, not murky, you know, you can see the bottom of like a lot of these lakes, and you're into like pine trees and crisp, clean air. I'll tell you that it was, Oregon is one of those places that is one of the most beautiful places I've been in the United States. So I'd like to say it's nice to be back, but frankly, I really enjoyed my time there. But anyway, how are you guys doing? And thank you so much for covering for my analysis or lack of analysis for the last week for the ForexAnalytix subscribers. Thanks for filling in for me. I really appreciate it.
No problem at all. It looked like the markets were going to go all crazy when you were leaving, but then they kind of calmed down.
Yeah, they did. We saw that. As I mentioned, you know, I mean, seriously, as I buttoned up my computer, I think that happened, like literally. And I know everybody that has known me for the last 15 years from the Wise Trade Group, from MB Trading. They were like, oh yeah, here it goes. Blake goes on vacation. The poop hits the fan, and it looked like it was going to happen, didn't it?
Yes, it did. Yeah.
Yeah, but in current markets,
for about 10 minutes.
That's not as easy as it used to be, right?
Yeah, it looked like it for about 2 days, and then boop, we're right back up again. So what do you make of the markets now that we're here? I mean, let's not dispute the fact that we hit new highs in the S&P after I left, and this last week. Relative strength has been divergent. We hit the big 161% extension. They don't look too convincing up here, but it is today's market. So what are you guys making of the price action here?
My view is the same. Rates, the dollar, and stocks, excuse me, they're all interconnected. And we are now in a tug of war between higher inflation and things looking, I mean, today we got average earnings in the UK, 7-point-something% year on year. We're seeing inflation everywhere coming through. But on the other hand, we have the major central banks still telling us that this is transitory. And, Powell yesterday was dovish. So, and he speaks again today. So as long as they are still trying to hold the fort, and still accommodative, then it's going to be very difficult to see a down move in risk.
It's going to be like the captain of the Titanic. He's still going to be on the wheel when the ship is, half in the sea.
The Fed is the biggest buyer, and as long as they're still buying, it's a huge force. I think we're going to correct, but the question is
the only problem still is that once we get past to the point that they can claim inflation is transitory, because how many months in a row can you claim a phenomenon is transitory? 3, 5, 7, 12, 20, how many?
I was really surprised that you actually had the stock market hit new highs as our inflation, the CPI print came out earlier this week.
Yeah.
I was actually quite impressed with
What about bonds yields going lower as we're hitting the high inflation prints?
Right.
Can you explain that? I can't.
And I have the 10-year actually up, and obviously this is we're testing some pretty critical levels as far as support goes. And then you got like I was just looking at the Euro Swiss earlier this morning, and I'm like, man, this thing is damn weak. I mean, you look at the Euro Swiss, and this is reflective of weaker yields as well. We are much lower, and I'm surprised that yields are lower. I'm surprised that stocks are higher. So maybe it is transitory, Steve. At least that's what the market says. It believes what the Fed is saying. That's the way I interpret it. What do you guys think?
Yeah, same applies with recessions. The market always believes the Fed that there is no recession. I remind you, during the previous recession, because let's not use this one as an example, since the nature of the trigger was somewhat different than it usually is. I remind you that the Fed was claiming that the US is not in a recession during the period that we knew post-event that the US was in the deepest recession since the Great Depression. So the market will keep believing the Fed, until it becomes more than obvious that what the Fed is saying is what the Fed is only willing to acknowledge. I remind you that Ben Bernanke, in an interview he had given, quite some time post financial crisis, he admitted that they couldn't honestly acknowledge the extent of the problem because they were afraid that that would create a worse situation. So basically, he admitted that the Fed is obviously willing to lie to not show pessimism. So knowing the history of the Fed and these type of acknowledgements, not that we needed any type of acknowledgement to understand what we see with our own eyes, why exactly does anybody expect that the Fed would say anything else than inflation is transitory, no matter what they thought about it?
Yeah, I mean that I agree with. I mean, the Fed is the ultimate cheerleader of the market.
Exactly.
They have to be, and because look, you can't if you are in charge of the finance, basically the the financial markets, you're not in charge of. You're basically the hero, or that's not the term I'm looking for. Excuse me, because it's I got up at 3 this morning, so and it's 5 o'clock in the morning here. But what I'm saying is, as the Fed is like the ultimate cheerleader of the markets, they have to continue to praise, to tell us that things are going to be okay, because if the mindset of the market, or the that's not the term I'm looking for. Stelios can probably help me out here. If the sentiment of the market changes, it's hard to put that. I think that's the toughest genie to stuff back into a bottle, is when sentiment changes, and they can't allow that to happen, regardless of what's happening. But what they will, and they do have to walk a fine line, because these inflationary pressures, people will, continue to believe that as long as they stay persistent, I'm just going to give you an example of, my friends that I just visited. They're like, look, they had to purchase a new house because they were forced out of basically their other place. They reached a point where they had to buy a new house, and they're like, well, we know we're buying the top of the market, but we have to buy it anyway. And that's what you get people in that mindset, like, look, I have to buy this, whatever it is, and even though the prices are high, I'm going to have to do it anyway. And that type of sentiment could continue, for a while longer, unless the Fed, if the Fed doesn't try to contain it, then that could accelerate. So
the problem is that the Fed knows very well that these two things don't combine. And which two things am I referring to? Keeping the stock market extremely elevated and at ridiculous valuations, keeping the bond market at extreme valuations and bond yields extremely low, and at the same time fighting inflation. It's absolutely impossible. So they know that if it comes to that, and when it comes to that, there is no perfect solution, right? There is no like, we're going to invent something that's going to do all of that at the same time. You know what I mean?
Yeah, I'm sorry, Steve. Let me go ahead and say, Dale, you'd send a message just to us. Yeah. So Dale wanted to ask, is Peter here for his interview? Peter, if you're here, let us know.
Thank you, Blake.
Yeah, no problem. I just looked and I was like, oh, that comment came to all of us. He's okay. Noticed. No problem.
I've only been using Zoom for 2 years.
Yeah, right.
I'll catch up. I'll catch on.
No problem. Hey, so Stelios, what do you think about the inflation? What do you think about the market's reaction to CPI? I know you pointed out the yields went down, but what do you think? What's your opinion here?
Good question. I don't get it. I don't understand it. I wrote on the chat room this morning that I really, really want to short treasuries, bonds, and gilts. I really do. The question is, how do you time it? So, I'm probably going to start doing that in the near future. But, something's got to give. Either inflation comes down or yields go up. And so stocks go down and the dollar rallies. Exactly what you described before. I think it's going to happen. The question is, how can you time that? Because if you're leveraged, then you can get stopped out very easily. So it's a very difficult one. I agree with your view on dollar pairs. I always said I think the dollar is going higher towards 94 and a half in DXY. I'm feeling a little bit more skeptical recently because the sentiment of DSI and positioning, they're going to neutral now. So it's not as one-sided as it used to be.
Yeah.
But, I think the medium-term path for the dollar is a lot lower. But this spike, I still think it's happening, but I'm less convinced than I was before. And like you correctly said, I think that, currencies like dollar CAD, dollar Norway, those commodity currencies, I think they're going to be the ones that move the most. So, yeah.
Okay. And thank you very much. And I agree with that, especially on the intermediate time frame. And I want to just take, when you're talking about the dollar as a whole, you really got to take a look at the euro, right? So let me point out some specifics here about the euro dollar and what has happened. So if you look at, our flag pennant that we've been following for the last several weeks, everybody knows I'm bearish the euro. I think we're going to eventually break this triangle. Look at the blue line here. You can see that, right? So I think we're going to eventually break that. You can see how we've tested it, held it just as early as yesterday. So it really signals to you how important yesterday's lows at 117.70 are. Like, if you want to know, in my opinion, the bull bear line for the euro dollar should be right here. That means as long as we're above 117.75, you could be bullish, but if we get below 117.75, it is immediately bearish. Immediately. Okay. And by the way, did we miss some data? So, and I'm sorry.
Jobless claims came in as expected.
Philly Fed just came out.
Philly Fed is slightly weaker. Empire State is a lot stronger. So overall,
kind of mixed.
Yeah, new orders lower than expected. Prices paid lower than expected. So kind of mixed overall. Maybe on the weak side slightly.
All right. Thank you. I think everybody's waiting for Powell's comments today. Just they want to confirm that he was as dovish as he was yesterday. So anyway, going back to and the euro's it's trading heavy, it hasn't really done much. But going back to the euro dollar, I just want to reiterate, if you take this flag pattern here, the flag itself, we hit the 161% extension. Basically, we came up just shy by a few pips, but you can for argument's sake say that's been completed, right? And let's get rid of this. We don't need this fib anymore. All right. So now, just to clean up the charts a little bit, you'll notice that now the euro, suggests that we are going to break this bull bear line at 117.75. Notice how heavy the pair is trading. And Dale, I'm just continuing to talk because.
Oh yeah, go ahead. Yeah, keep going. It's okay.
All right. So you notice we're trading when we get to a key support or key resistance, and then we hover or we consolidate near those levels, the risk starts to really grow that we're going to eventually break, especially coming off of a nice downtrend for the last month. Now we're just kind of consolidating at these lows, and a break below this 117.75 should, accelerate the losses, in my opinion, back down towards these levels. Down here, the support maybe down at 116.50. Now, as Stelios mentioned, and I'm sure Steve feels the same way, the dollar longer term is at risk of more longer term move lower. Personally, I think the euro dollar trades back below 115, maybe trades back towards 113.
If it doesn't break through this triangle, right?
Well, if it breaks the triangle, yeah, we're going to be trading back down here towards 113, and that I am a buyer somewhere in this neighborhood, right? Somewhere down. If I have to just give you guys a guesstimate of where I'm, somewhere. Shoot, I didn't want to do that. I hate it when I grab the wrong thing. Okay, so somewhere down here. Didn't want to do that either. This is the area that I want to be a buyer. Somewhere below 115, closer to 113 and change. I think that this is going to be the level ultimately where you can be, short dollars. And that for me is going to be the place that I'm looking to be a buyer of the euro. But right now it still looks vulnerable. And like I said, all we need, just you just sprinkle in, just pepper in a little bit of 5% pullback going into the remainder of the summer, going into the fall. We should see some dollar strength come in as a result, in my opinion.
I like that target. In
Yeah,
fact, I think that's my pink line.
No, this pink line is a multi-year broken trend line. So
you like pink lines, Dale, right?
Yeah, you might like the pink line,
Pinkert.
but that one's been there for a while. That was our broken multi-year trend line. So that one's been there for ages and ages and ages. But that one is, whenever you get a broken trend line, especially major ones, they are always susceptible to retests. But you got to respect them, right? So that would be a level that I'd be looking for. So anyway, so Dale, doesn't look like Peter's here.
No.
Okay, well,
I've tried to raise him.
I'm, Steve Stelios, if you got, let's talk about something really quick. I know you guys have been anticipating an announcement from the ForexAnalytix community. We didn't have a chance to button up everything we needed to button up. We didn't get a chance to button everything up before I left, unfortunately. We have all of our ducks in a row, and tomorrow we're going to have a special guest on this webinar tomorrow. So make sure that you're here tomorrow. We're going to make an announcement. I think you guys are going to be really excited. Those of you that are ForexAnalytix subscribers should be really excited. Those of you that have not been might be really excited to join our community after tomorrow. But it's a really big announcement from our group, and I'm super excited about it. It's been a few months in the making, and I think it's going to be just a wonderful thing for those of us that are here, and even for those of you that are not ForexAnalytix subscribers. If you currently are not a member of ForexAnalytix, you're gonna benefit from it too, just by listening into these free F.A.C.E webinars every day, in my opinion. So Steve Stelios, is there anything that I missed regarding that? Just be here tomorrow. You're
going to do it in the opening half hour, because I do have an interview scheduled tomorrow.
Well, we'll find out. Okay. Probably yes. Yes, okay. We will. So anyway,
the market sniper, who I've never interviewed before.
You know what? I've been following that dude for probably a good 8 years or so on Twitter. So I'm gonna be interested to hear what that gentleman has to say. I forget what his name is.
Yeah, one of our attendees requested I reach out to him, Hannah. So Hannah, ask and you shall receive. Francis will be here tomorrow.
Okay. And Dulce asks, does that include the light subscribers too? The surprise? Absolutely. Oh, if you guys are, by the way, if you guys are light subscribers, that means you're on the $19 a month subscription. You listen to our private webinars for the ForexAnalytix community. The question was, will this benefit you as well? Absolutely, because it should impact those private webinars. Those private webinars on a daily, probably more on a couple times a week basis, but it's definitely going to be a benefit to you for sure. So anyway, so Dale, I guess that's it, right?
Yeah. Welcome back, Blake. I'm glad you had a great time.
Well, good to have you back, Blake, indeed.
Yeah, good to have you back. And thank you. Steve, I know Steve's been covering the with Stelios's help, the evening analysis. Stelios covers on more fronts that behind the scenes. So thank you both for your help, and those ForexAnalytix team members that are listening in right now. You know who you are. Thank you guys and gals behind the scenes helping out while I've been gone. It's, you know, we're a small team. It's not like we're a 300 person unit. You know, we are a much smaller team than that, but we have to pick up the slack when one of us is out. And you know, when I'm out, I'm just like any other team member. When I'm out, everybody else, you know, picks up the slack around. So thank you so much. And I'm happy to be back with you guys that are listening in. So thank you very much.
Thank you,
Okay,
Blake.
buddy. Next
All right,
man
guys.
up. That's our philosophy, like the NFL. Someone gets injured, it's the next man up. Right, Steve?
Absolutely.
All right.
Okay, so in 35 minutes, as usually, we have the morning edge. So
Yes.
we'll see.
We'll see you on the morning edge as we start powering through the bias chart. So it's been, you can see it. It's been built every day since I've been gone, and I'll be building it today for you guys, getting ready for Pal speaking here a little bit later.
Bye-bye, everyone.
Okay, everyone, remember, don't just count your pips, count your blessings. Thanks for your attention. Get your cash together to join for the surprise that we have that we'll be talking about tomorrow. And with that being said, good hunting the rest of the day, everyone. See you tomorrow for TGIF. Adios. Thank you, team.